Welcome to the deep dive. We're here to cut through all that noise and get straight to the insights. If you're like me, you look at the news feed and it's overwhelming, right? A flood of headlines from everywhere. Feels impossible to keep up, let alone see how it all connects, but, well, that's what we're here for. Today is July 17th, 2025. We've got this curated graphic, basically today's top 10 global news stories. And our mission really is to pull out the key nuggets, make some sense of it all.
Exactly. And what's really fascinating, I think, is how these headlines, they seem so separate, don't they? You've got new rules in India, military drills near Taiwan, even shipping problems on the Rhine River in Europe. But they're actually deeply connected. They show these big underlying currents, economic, geopolitical, environmental, and they really do impact all of us wherever we are. So the idea is you walk away not just knowing what happened today, but
Yeah.
really getting why it matters and, what might happen next.
Okay, so where do we start seeing these currents? Often it's in the subtle shifts in financial markets, sometimes not so subtle. Let's kick off with India. Some really eye-opening stuff happening there. We're seeing their market watchdog, SEBI, that's the Securities and Exchange Board of India. They're planning to extend the maturity of derivatives contracts. Now, why is that such a big deal? Well, get this. An astounding 91% of retail investors lost money. Lost money in short-term positions just last fiscal year, FY 2025.
Yeah.
91%.
Yeah, that number is it's staggering, isn't it? It really shows the kind of systemic risk they're trying to get a handle on.
Exactly. So SEBI's thinking is clear. Try and curb that really speculative trading. And this isn't just about, protecting individuals from losses, though that's part of it. It signals a bigger strategic shift, maybe, in how emerging markets like India are thinking about long-term stability versus short-term, well, churn. Could even set a precedent globally, maybe, for regulations aimed at shielding everyday investors.
Absolutely. And these moves by SEBI, these domestic regulations, they don't exist in a bubble, right? They're tied directly to how the Indian rupee is doing on the world stage. And we have seen it edge weaker recently. It hit around 86.06 against the US dollar.
Right. And it's not just India feeling that pressure, is it? I mean, that dollar strength is widespread.
Exactly right. It's largely a knock-on effect. You've got a stronger dollar globally, plus this ongoing uncertainty about what the Federal Reserve is going to do next. Even though the latest U.S. PPI data, that's the Producer Price Index, it looks stable, that underlying strain from the Fed's shadow, it's hitting Asian currencies pretty hard. It's more than just pressure. It's a kind of a stark reminder of how dependent many economies are on the Fed's decisions. A subtle dependency, but definitely there.
That makes a lot of sense. So if we look beyond India, what other currencies are sort of telling a similar story right now?
Well, take South Africa's rand. It weakened by about 0.4%. Again, the U.S. dollar climbing.
Yeah.
Investors there are really watching the G20 finance talks in Durban very closely. And you're seeing South African bond yields creep up a bit. It feels like a cautious mood. Okay, a cautious mood there. What about elsewhere? Japan? Yeah, Japan's yen also weakened about 0.4% too. That seems tied to worries about a trade deadlock. Plus, they have upper house elections coming up. And there's even some chatter that a previous tariff pause between the U.S. and Japan might be at risk because of this rising political uncertainty.
So if we zoom out a bit, the big picture seems to be, well, the dominant U.S. dollar and the ripple effect of what major central banks, especially the Fed, are doing, or what people think they might do.
That's it.
It really makes you think how these small-sounding percentage shifts in currency, 0.4% here, 0.4% there, they can actually add up to have a pretty significant impact on whole economies, import costs, exports, all of it. So given all this currency movement, what's the vibe in the broader markets? What's the sentiment?
Well, a key thing here is investor confidence, or maybe the lack of it in some areas. It feels a bit fragile. India's main stock indices, their benchmarks, they actually dipped about 0.2%. And a lot of that seems to be investors worrying about the future of Fed Chair Powell. There's speculation, about possible U.S. intervention regarding his role, and that's definitely creating jitters globally.
Right, that Powell uncertainty has been hanging around.
It has, and everyone's kind of holding their breath, waiting for earnings results from huge players like TSMC and Netflix. These aren't just tech giants. Their results often act as bellwethers, signaling sort of the health of the tech sector and maybe the wider economy.
Yeah, they're definitely huge influencers, but you could argue just looking at big tech doesn't give the full picture, right?
Yeah.
Especially for smaller businesses. I mean, we saw Tech Mahindra drop 1.5%, but then Ixigo, the travel platform, hit a 12-month high. It feels quite mixed within sectors.
That's a very fair point. You're absolutely right. It's nuanced. While those big names might indicate a general direction, that mixed performance you mentioned, like the travel platform, doing well. It suggests maybe underlying consumer trends or specific industry dynamics can create pockets of strength, even when the overall market mood is cautious. Generally, though, yeah, Asian shares are holding steady, but futures are looking a bit mixed. Everyone's waiting for more signals.
Okay, but it's not just economics pulling the strings, is it? Geopolitics seems to be playing a bigger and bigger role, not just reacting, but actively driving some of these shifts. Let's turn to Taiwan. Some pretty dramatic news today. A simulation of a China missile attack. Seriously chilling. Air raid sirens going off over Taipei as part of their annual drills. And really illustrating the pressure, 58 Chinese aircraft probed Taiwan's ADIZ. That's their Air Defense Identification Zone. Wow.
58.
That really brings home how real these tensions are becoming.
It's incredibly potent imagery, yes. These aren't just routine drills, they're sending very clear signals designed to exert pressure. And, shifting gears but equally impactful, we're seeing how domestic policy in one country can cause huge global ripples. Thinking about U.S. immigration policy here.
Ah, you mean the push to revoke TPS, temporary protected status.
Exactly.
That lets people from countries in crisis live and work in the U.S. for a time. Now there's this move to revoke it, ramp up deportations. That could potentially affect, what, up to 1.1 million workers?
That's the estimate.
And economists are saying that could cost the U.S. economy something like 0.3 to 0.4% of GDP. Not insignificant.
Not at all. And what's really striking is how these political decisions connect directly to economic outcomes. Economists are already flagging warnings about potential labor shortages, especially in crucial sectors, and even the possibility of stagflation. Slow growth plus inflation coming out of these immigration policy shifts. It just shows how a policy that seems purely domestic can have this massive economic footprint affecting labor, inflation, growth. It's a classic case, really, of policy intended for one thing having major unintended economic consequences.
So we've got economic policy, geopolitical tensions. Okay, let's look at resources and infrastructure, critical pieces. What's happening there?
Well, the oil market's showing a noticeable rebound, for one. Brent crude is up to around $68.76 a barrel. WTI is at $66.71. And this seems to be lifted by some positive economic data out of the U.S. and China, maybe prospects of lower tariffs for some smaller countries, and healthy draws on oil inventories. So that signals demand picking up.
Okay, so demand seems resilient there.
Yes, but then contrast that with a major environmental and logistical headache. The Rhine River. Shipping is being seriously disrupted.
The Rhine. Yeah, that's such a vital artery for European trade.
Absolutely critical. And the water levels in Germany are just persistently low. It means cargo barges can't load fully. They're facing capacity cuts. And that directly hurts farming industry logistics, basically. Even though they've had some rain recently, it hasn't been enough. If you step back, it just clearly illustrates how climate-related problems are hitting crucial supply chains directly. And the bigger picture, it highlights, maybe, a surprising fragility in global logistics, this complex dance between the environment, trade, and economic stability. It's a potent reminder that, not all economic shocks start in boardrooms or government buildings. Sometimes they start with a river running low.
Wow. So yeah, quite a journey we've taken. From market tweaks in India to the power of the U.S. dollar affecting currencies everywhere, then rising geopolitical heat driving policy changes. And even environmental pressures messing with vital trade routes like the Rhine. It really is eye-opening how these stories, which look separate at first glance, they actually weave together to paint this big, interconnected global picture.
Absolutely. And that's really the value, I think, in digging into these nuggets of news. It pushes you to think critically, doesn't it?
Yeah.
About how a shift in one place, maybe a central bank decision or a sudden policy change, or, yes, even a river's water level, how that can cascade and create these unexpected ripples, economic or geopolitical, right across the globe. It's just a reminder that it's all connected. And understanding those links is really key to making sense of our world.
It does make you wonder, though, in a world this volatile, this interconnected, what seemingly small event happening today, maybe something we barely noticed, could be the unnoticed trigger for the next major global shift. Something to think about.